Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where we're counting this range here as a 3-wave corrective structure in a regular flat, 3-wave A, 3-wave B, 5-wave C, and then a diagonal structure. A regular flat is less common than an expanding flat, but it is more common than a running flat, and the most common target area for wave B is between the 1 and the 105 Fibonacci taken from the high to the low of this wave A, and a common target area for wave C is between the 1 and the 1.236 trend-based fib extension taken from the high to the low of A to the high of this wave B, which as you can see has been touched. Now what is important is that an ending diagonal in a wave C, as we have a lot of overlap here, needs to consist of zigzag family structures, meaning in the ending diagonal, all of the waves that we have, 1, 2, 3, 4, and 5, need to at least be a simple zigzag structure in an ABC down or an ABC up, or potentially a double or triple zigzag structure in a WXY or a WXYXZ. Now, when we look at the structure that we have here at the moment, we can see we have 1 low, 2 low, and 3 lows, right? So can we count a 1, 2, 3, 4, 5 ending diagonal structure that is finished? Well, potentially we can, but it does mean that in a wave C, this has to be a zigzag structure, and that means 3-minute counting. Not really something that I like to do, prefer to stick around on the 15-minute minimum. But this move to the downside here does look like a corrective structure to the downside. So there is the potential where this is not a zigzag structure by itself in a finished 1, 2, 3, 4, 5 diagonal, but then we have an ABC over here, correction to the upside, right? Then another zigzag to the downside, correction to the upside, and then we expect another zigzag to the downside, meaning this could be the potential low, but making another low over here is no problem for this scenario as long as price is not taking this high over here. The moment price is moving to the upside and takes this high, then we actually do not want to see another low to be made, because it means that then wave C is going to move to this low over here, and we want to see continuation to the upside, as then we count a finished ABC structure. Now this scenario is then part of a bigger impulsive structure to the upside where we're looking for another wave 5, 1, 2, 3, 4, and 5. In this particular scenario, preferably the low of your wave 4 is in, and that's just because of time, right? Because if price makes another low over here and extends this diagonal in a 1, 2, 3, 4, 5 wave structure, right? We're getting very, very close to the 7 fib time, and the 7 fib time is incredibly rare for a wave 4. The vertical lines, fib times, are taken from the high of 1 to the low of 2 to the high of wave 3, comparing wave 2 in time with 4 in time. Of course, you have the rule of alternation where it says if wave 2 is short in time, wave 4 can be long in time. However, time, as it is very important in Elliott waves, does say that a wave 4 usually ends between the 1 and the 4 fib time. The moment you go to the 5, the 6, the 7, probabilities start to decrease for this particular count. The common target area for a wave 4 is between the 236 and the 05, 50.4k to 47.4k taken from the low to the high of this wave 3. Invalidation is the 618 at 46k, and the less common target for 4 is the 146 to the 236 area, 51.4k to 50.3k. In the bearish scenario, we're looking for a finished move to the upside, and this is then the end. This is the high over here, and then we want to see a corrective structure to the downside, either in an ABC or a more impulsive structure for lower prices in a 1, 2, and eventually a wave 3 to the downside. Now here we're then looking for a leading diagonal, and in a leading diagonal, which is different than an ending diagonal, you can have a 5 impulsive move, 3, 5, 3, 5 leading diagonal, where the 1, 3, and the 5 are an impulsive structure, and the 2 and the 4 are a corrective structure, meaning a zigzag. A leading diagonal can also consist of zigzags in all of the waves, right? So a diagonal actually makes it quite confusing where, hey, we can have a wave C, but also a wave 1 or a wave A. Now in this particular scenario, same thing, either this is the low if price takes this high over here, right? However, making another low is no problem for wave A or 1. We then just move wave A or 1 over here and then look for a 3-wave corrective structure to the upside. The most common target area for a wave 2 or a wave B are the fibs that you see on the chart, taken from the current high here to the current low that we have. Common target area for B is between the 382 and the 886, 51.4K, 52.7K. Common target area for a wave 2 is between the 05786, 51.7K, 52.5K. And in this scenario as well, if price takes this high, it invalidates another low in a diagonal, because in a diagonal you do not want to see price take this high over here, right? If price takes this high and then takes the low, then we could have more bearish scenarios, which is the case over here, right? Here we can go up for a 2 or a B, reach higher levels, also hit the resistance that we have above price, by the way, which is the blue box here between 52.2K and 52.4K. And then in this scenario, you do want to see another move to the downside, right? You do want to look for a 3 or a wave C to the downside. Now, important support to the downside is, of course, the support resistance area, just a simple SR flip, 49.9K, 50.4K. But the more strong support area as well is this blue box here, 49.1K to 49.8K. In the bullish alternative scenario, we are looking for this structure to be a WXY, where this is the end of a structure. I'll show it in a second. And then we look for a bigger 3-wave structure here, where we can take this high and still take the low as well. Zigzag in W, flat structure in X, and then eventually a wave Y to the downside. Now this scenario would then be part of an alternative bullish scenario, and I do like you to focus on the word alternative here, right? Because currently it's lower probabilities compared to the other scenarios shown earlier, but at least I want to plant the seed that this is something I start to look at. Here we're looking for a wave 1, 2, 3 is now finished on top of the high instead of this high here, and then we're looking for this wave 4. Now the sub-degree count of this wave 3 is a little less nice, but it is a scenario I'm observing. Common target for your wave 4, 236 to the 05, same target area as previously, 146 236 area, less common, 0.618, invalidation, and also time-wise, it is still okay. The fib times are taken from the high to the low of 2 to the high of wave 3, comparing to with 4 once again, and currently we are ranging after the 3 fib time but before the 4 fib time. When we look at CVD divergences, then we still have the bigger bullish CVD divergences here, high low in price, lower low on the CVD. However, what is important is that you do want to see support on the right side of the recent high, right? So we also want to see bullish CVD divergences building in this area here. If we do have a bearish CVD divergences building, then these get priority over this bullish CVD divergence. Now at the moment, very, very locally, we have both a bearish as well as a bullish CVD divergence, so it's neutral, typical weekend price action. We just have to be patient and wait. So if we then look at the probabilities of the different scenarios, then on the 4-hour time frame, probabilities are only slightly in favor to still take the high. We also did not yet fill the monthly gap, which has the top at 53.3K, as well as the weekly gap, which has the same top over there, as you can see over here, 53.3K. And it is common for gaps to be filled once you close higher time frame candles inside the gap. And also we have the 4-hour bullish CVD divergences, and we don't yet see big bearish CVD divergences here in this area, right? However, the con is that this wave 4 starts to be very, very long in time in this impulsive structure. 1, 2, 3, 4, 5, right? This low is made just before the 6 fib time, which is uncommon, lowers the probabilities. And if we would make another low, it lowers probabilities even more because we get close to the 7 fib time, which is just very uncommon for a wave 4. Because it is weekend, I prefer to wait very patiently for more information in this range. I do not like to make radical decisions here. I wait for price to show me what it wants to do, give me some proof, and then I can take some action. If price can hit the 886 Fibonacci, which is the Fibonacci over here in yellow, right, sitting at 52.7K, then the probabilities become bullish, because the moment an 886 is hit, it is a rare target for a wave 2, common target for a B, or a wave X, meaning any move to the downside has a higher probability of being a C or Y to then go back up at a later stage. So the 886 here is playing an important role, and preferably we also of course like to see some bullish local CVD divergences, right? If price takes the 52.1k high, which is this high over here, I spoke about it a lot in this particular video, and then makes a new low, we're looking for either continuation in a wave C or a wave 3, or we have the bullish alternative scenario with the WXY, right? So we have to observe the reaction at support, which is both the support resistance area we have here as well as the support area below, right? So if we lose the support area, then we can look for a bigger retracement to the downside. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.